From हर घर कुछ कहता है to जब घर की रौनक बढ़ानी हो, the paint industry in India has been a big contributor to the overall home improvement thesis. Up until now, it was status quo with one large player and some smaller players as well. But now things are about to change because competition is heating up. So let's take a look at some of the interesting insights and trends in the sector. Well, currently we have Asian Paints as the big leader out there with almost 60% market share, followed by a distant second at Berger, Kansai and Akzo Nobel at 7% as well. But now things are changing because now a lot of supply is coming in, a lot of them from the non-paint incumbents itself. The industry is expected to add 2.5 million kiloliters of capacity over the next 3 years, which is almost 20% of the existing capacity. The total capex outlay for this is 20,000 crores and 50% of that comes in from Grasim at 10,000 crores itself. Asian Paints, looking at Grasim's announcement, has made its own capex announcement of 8,000 crores, with the other 2,000 crore being distributed among the others. When it comes to investment in the paint industry, 80% of that goes into building the plant, building capacities and working capital, whereas 20% goes into building distributor margins and advertising as well. So that goes into the P&L of the company. The new players have tall targets. Grasim is targeting to be the number 2 player, whereas Grasim also is targeting 10% market share by FY26. Even relatively smaller players, Nippon for instance, which is the number 2 player in Tamil Nadu, is now looking beyond that, eyeing Karnataka. We have big targets coming in from players like Kamdenu, some investment coming in from infra market into Shalimar as well. What does this mean for the incumbents? Are they increasing their capacity? Yes, from 1751 million litres, Asian Paints is increasing its capacity to 2636 million litres. That's a near 40 to 50% jump. A similar amount of jump is what we're seeing in Berger as well. 620 million litres jumps all the way to 1100 million litres. We have a 25% jump in capacity coming in from a relatively smaller player, Indigo as well, and Kansai Nerolac too has outlaid a capacity expansion or a program of 290 crores from its current capacity of 600 million litres. The most important thing with so much supply coming in is there enough demand? Perhaps yes and more, because industry experts believe that the paint industry is expected to grow anywhere between 11 to 13% in terms of demand, which means about 1.2 to 1.5 times real-time GDP. So who wins and who loses? It all boils down to 2 things in the paint industry: distribution and marketing. When it comes to distribution, the number of dealers, Asian Paints is head and shoulders above the others with 75 to 77,000 dealers. Birla White, which is of course owned by Grasim, has 54 to 55,000 dealers in its white cement category. But remember, 70% of that also cater to the paint industry, so that could be a formidable challenge coming in from there. Berger, Kansai, anywhere between 30 to 35,000 dealers, Akzo Nobel and Indigo between 15 to 18,000 dealers, all of them adding capacity in terms of dealership network too. But importantly, let's talk about ad spends. The larger incumbent players spend sub 5% of their sales on a large base on advertisements, whereas the others, to spend on brand building, have to spend a lot more of their sales. Nippon and JSW Paints, for instance, spend anywhere between 15 to 20%. So what does this mean? It raises some interesting questions for all of us to ponder. The first one, will incumbent players hold fort via brand and distribution strength in this market? The second one, can new players manage to gain both margins and market share? Or are lower margins the new norm for the paint industry? Could we see some M&A action as well in the industry is the big question. And finally, for investors, the biggest question, should heightened competitive activity lead to PE derating for a sector which has for the longest time enjoyed high PE multiples?